Happy New Year's, everyone. There's a few things we need to consider for this week, as I do expect, as I've said in the last week of videos so far, that I do expect some more minimal upside to SPY here. I do expect us to continue a little bit higher. Again, I am bearish for the first half of 2023, as I've mentioned before in our videos, which if you haven't watched before, you can subscribe below. So I do expect some more upside. I'd like to see the low 390s first. That'd be a perfect head and shoulders pattern with the left shoulder here, the head, and then the right shoulder would be around this 390 range. That'd be very ideal. Obviously, there's other things to that that I'm using based on technicals. First of all, we have a large dark pool premium range here between roughly 374 to low 380s. This started all the way back in late October, early November. We had billions upon billions of premium each day and signature dark pool prints all the way back here. And also, as of recent, we've seen a lot more of these larger prints as well. If you look from the previous week, we saw 3.1 billion at the 383 level, so that low 380 range. If you look back each day, you'll see that we had multiple billions in prints, like this 2.1 billion at 376. So we're still seeing a lot of dark pool, potentially accumulation in this range as of now, which can give us a nice support level to bounce off of, at least in the near term. Along with that, we do have a nice inverse head and shoulders pattern on the 15-minute chart. We have the left shoulder here, the head, and then the right shoulder. And this characteristically is a bullish pattern, assuming we do not fall lower than around 377. That would be kind of like the negating factor if we fall below. But as of now, we have pumped kind of like end of day into the end of the year here, and we'll see what happens with tomorrow at the open. But so far, it looks like technicals are pointing for some more minimal upside, which can be followed with a potential downside catalyst, as we've seen a lot of puts on Cheddar Flow. If you go over here and filter, like if we just check from the past day, you can see here if you filter for over 1 million in premium to see what the whales are doing, we did have 86% puts to 12% calls. Yes, there still is a lot of these super deep in the money puts hitting the tape. This is the arbitrage trading strategy that I shared with you guys last week, but there's still quite a bit of puts that we've seen throughout the week, like this 1.2 million in premium for the 364 strike. This is quite a bit out the money for the 217 expiration. So I'm interested in these types of prints. We haven't seen anything super insane in terms of prints like this, kind of like we saw back in August and September. We are seeing tons of prints super far out of the money like this for over 1 million in premium each day, just on top of each other, just tons of them. So we haven't seen a lot of those yet, but I still am monitoring because we tend to see big money enter well before the eventual move happens. They don't typically nail the exact timing. They kind of just accumulate on the way up, at least accumulating shorts for that downside later on. So they do have time on this, at least around a month and a half. So I will monitor and see if we continue to have prints like this in the future, and I would suggest you guys do the same. But for the most part, if you look back over here, it looks like we are gearing up for some more near term, at least during this week, upside, which I would assume would be followed by some downside into 2023. So the downside will start once this level is broken. This is a very key support range, just based off of the dark pool accumulation we've seen from back here in November, and then also as of recent. So once this range breaks, we will see a lot more downside, because remember, we did break below the ascending wedge that we had formed from the CPI lows on October 13th. So this ascending wedge is in the yellow. We have the bottom support here and the top resistance. We broke below this. We retested the top of it. Also, at the same time as we retested the downward trend line that started at all-time highs from back here, you can see this acted as a key resistance before all major downtrends throughout 2022, like we had here in early April, here in the middle of August, and then also additionally over here, we had a nice convergence of this ascending wedge at the same time as this downward trend line, and we had the hard rejection up here that we've fallen off of. So again, the trend is down as of now. That has been the case since we got rejected from up here, but however, as we know from previous downward trends, we have had rallies, at least short covering rallies along the way down, like we have here in the highlighted boxes. So this is something that can happen again, because we are in range for one of these rallies to happen. It doesn't have to be as substantial as what we saw back here, kind of on like September 7th, 8th, and 9th. However, these rallies still happen. These short covering rallies are a healthy part of a downtrend. So you have to be very conscientious of these, because a lot of shorts end up losing off of these types of rallies, and then it's followed by some more additional downside, and they miss out on that future downside. So you have to be careful of that, and that's why I'm waiting very patiently to see low 390s to end up shorting. Additionally, for the Dow Jones, which characteristically from this past year has been the strongest index out of the main ones, we have seen a small bounce here off the retest of its own downward trend line, which I've referenced in the past. This one also goes to all-time highs, and we bounced straight off of the retest over here. However, it remains weak. We have a head and shoulders pattern, which is bearish by nature from up here, which the neckline is around 34,000. So we need to break above that to have continued upside. Otherwise, this head and shoulders pattern will likely play out, and we will likely see some form of a breakdown in early 2023 below the downward trend line, which would characterize all of this as a fake breakout, and that would lead for a lot more downside, and that will be one of the major keys to understanding when the new downward trend will be present on the entire market. That includes SPY and QQQ, because remember, we still are in this downtrend on all of the major indexes, and QQQ not looking the best right now. It's still in its own major downtrend. Again, we have a demand zone here, similar to SPY, similar to how the Dow Jones is bouncing. That can help in the short term, but again, the trend remains down as of now. So I'm looking for a lot of these confirmation signals, such as breaking below roughly 259, 260 on QQQ, breaking below on the Dow Jones, this downward trend line, as well as SPY below the dark pool premium levels, and that will give us confirmation that we will continue to that downward move. And this will likely take out the previous yearly low we had from 2022 of this October 13th CPI day around 254. And this would lead for a lot more weakness for all of tech as well as the rest of the market once this does happen. So keep these confirmation signals in the back of your mind for when they most likely happen in 2023. Remember, a break below these key demand levels will likely set the new downtrend or continued downtrend of what we've already started. So watch out for those, because that can lead to a lot more downside. And on QQQ, the lower end of this channel would be somewhere around, depending on the day that it would hit, somewhere around the 230s, mid 230s to around 240. So you do have to be careful of that, because that could be a nice major sell-off for continuation if it does end up continuing with this downward trend that it's been within for the past year now. Also, speaking of confirmation, I always like to check up on the VIX each week just to get a sense of where we are. It's not the most useful when it's consolidating like it is right now. However, when a downtrend emerges like the one that I'm expecting in some point in 2023, we will see confirmation above this level right here, the blue one. This one goes back to November 4th, referenced it a lot in the past. However, we got rejected early December off of this level. So if this does break and we see confirmation with at least 2 daily closes above, this will lead to another upward spike that will very likely be in the mid 30s. So that's something to note. Again, as of now, it's just consolidating for the moment, but I always like to check this each week to get a sense, gauge where we are at the moment. And so far, not showing confirmation for either direction, just mostly chop. However, again, always a good thing to continue watching the VIX as we go forward, because it can give us a lot of info on where the market can go in the near to midterm once it gets above certain levels like the blue one I just provided to you. Along with volatility, I always like to check the dollar. It's remained pretty stagnant, just like volatility in the past month or so. However, we did see a major breakdown of this pennant formation we were in on the daily chart recently from this past week. This is very crucial because it can give a bid to the market, especially industrials like the Dow. After I just showed you earlier, it had to bounce off its downward trend. We had a key supply zone up here that previously was a demand zone, as you can see with these big pickups on these candles like on November 15th here, and then as well as November 28th. However, we fell below it, so it acted as a supply zone, and we retested it again after it attempted to break out of this pennant, and it collapsed straight off of that. So again, that can help with a bid for the market, which will be for the short term, like I explained earlier. And as long as we stay below here, it's more confirmation for some further downside for the dollar. So a very critical level to break if you do want to see some more dollar upside, which will weigh on the market and lead to some more selling, is above this key supply range. This is everything right now if you want to see some more upside on the dollar. So I am monitoring this, and for the most part, it's remained stagnant. Hasn't been that interesting since we had this retest up here and it collapsed off of the retest. So for the most part, it hasn't been too interesting, just like volatility. But again, I always like to check these to gain insight on potential trends in the future.